there's concerns in the Greek markets. Ethics is down about 7% in trade today, down about 14% for this year. In fact, if you look at it, in the last 3-4 days is what it has given. It's given up all the gains of the year. So we have Nick Parsons, who's the head of research at UK and Europe at the National Australia Bank. He joins us on the phone line from London. Thanks a lot for taking your time out and joining us, Nick. A word on the Greek markets and the European markets, all of them down in trade today. How much of a possibility of the Grexit has been factored in the markets? In case it has not been factored, so what is the possible downside that we're looking?
Well, good morning from London to yourself and all your viewers. I think at the moment the market is pricing the probability at no more than 5 or 10%. It is viewing these negotiations as essentially a fairly high-profile, high-stakes, high-drama game of chicken, and the belief is amongst both market participants and indeed the Greek government that politics will triumph over accountancy. And that ultimately a deal will be reached by the end of this month, which will see Greece remain in the euro. So I would say it's priced at something like a 5 to 10% probability, no more than that. In the event, to answer the second part of your question, in the event that Greece were to be forced out, either accidentally or deliberately, then I think the downside could be quite large for asset markets. But for the currency, I would say large but limited in time, because it's quite likely we'd have a sharp rebound in the euro after the initial decline.
Okay, so, what's the way forward now for the European markets? Because, the shadow of doubt or the shadow of uncertainty about Brexit continues to weigh on the indices. Today as well, the key European indices are down nearly about 1%. In the next few days, with the, probability that, Greece is likely to stay in the Eurozone, how do you expect the European markets to trade?
That's a very good question. Let's step back for a moment from the day-to-day changes and look that in Germany, the DAX index is down now 10% over the last 10 weeks. Now, that's quite a significant decline. We at one point managed to just about trade onto 12,000 for the DAX index, and here we are this morning. In fact, the high was 12 to be exact, 12,390, and here we are at 11,054. So we've lost the best part of 1,500 points. We're more than 10% down. This is more than just a correction. There are some real concerns here that the German taxpayers and German institutions are ultimately going to lose out, and it's that's weighing down on the European indices. So it's more than a one-day event. The key level to watch, if we look at Germany's stock market, would be a close below, and to keep it very, very simple, a close below 11,000 would be a very negative technical signal. We haven't closed below 11,000 since the third week in February. Now, were that to happen, then I think the technical backdrop would turn substantially more negative.
All right, Nick, was reading through some data, and Greece has about $20 billion worth repayments in the next 2 months. In fact, $2 billion of which come to the IMF itself. So, were a possibility of a deal being arrived at come in the next month, how do you see the yields shaping up going forward? Then we see them going up, but by what level? What is the range we see in the Eurozone yields to be at?
Right. Well, if we look at European bond markets at the moment, when we walked in this morning, Germany was yielding just 79 basis points for the 10-year. Elsewhere within Europe, France is 120 basis points, and in the peripherals, both Italy and Spain are around 230. Now, if a deal were to be announced, and that is the central expectation, then I think what it would tend to do, all things equal, is to push up yields in Germany, because after all, why would you need the safe haven bid? And so I think we would see German yields rising marginally. The hope would therefore be also that Italy and Spanish yields might come down. There could be some yield compression, some spread compression, and we might see yields there inching a little bit lower, because on the day-to-day, both Italy and Spain are up 7 basis points. So I think essentially, the logic is the following, and to keep it simple and to keep it brief, the logic is that on a deal, German yields go up and spreads with the periphery compress, and if there is no deal, German yields go back towards their lows, and Italy and Spain blow out maybe even by another 100 basis points from here. That's the simple maths of it.
All right, Nick, we'll leave it at that. Thanks so much for joining in. Bye.